I'm just going to wait just a minute to let people get in, and we'll get started. Okay, well, welcome everybody to the Leaders in Housing Counseling call, first one in April. This is Bruce Dorpalen, of course, from the National Housing Resource Center, and we have Matthew Gaudreau, who will be reporting as well, and is also doing the technical aspects of our broadcast. So we are, I understand there's a number of new people that are on the call today, and we're glad to have you. Welcome, and we hope you'll continue throughout the year. We are working hard to both move forward housing counseling as a policy program and as service delivery, to try to figure out stable funding and to really build the reputation and the public awareness and the policy impact of housing counseling. So with that note, let's just walk through quickly what's on today's agenda. We're going to give you an update on the federal funding work that's being done on the Hill, and have some small amounts of progress there. We have our 2015 Champion of Housing Counseling Award coming up. It'll be presented tomorrow. I'll give you a little more detail on that. Wanted to remind people about the HUD Task Force, which had an incredible 2014, but we need to get it going for 2015. Quick reminder about the millennials discussion. We'll have a presenter on millennials on the next call in early May. The bulk of the program will be involved with what we're going to do is a continuing series of conversations with thought leaders and innovators in our field. The idea is to talk about those things that expand the impact and also the sustainability, the funding of our work, and what's being done in local operations. So we're going to start out with Roz Quarto from ESOP. Hopefully many of you met Roz, but she's going to join us a little bit later on the call and will give us a few things that they're working on, which I think all of us will be interested in. And I hope to remember to make this plug a couple times in the call, but we are interested in what you're doing out there that's innovative, that's new, that attracts funding, that attracts new clients, that kind of deepens or broadens the work that we're doing in the housing counseling field. So if you know about programs, or if your program is doing something that's on the cutting edge there that we all could learn from, we're very interested in having more people from the field reporting in. So feel free to submit, and we'll have plenty of time during the year to do more of these. So with that, and of course, we'll talk briefly about joining NHRC, which we hope we're actually doing quite well these days, so hoping that you will join us as well if you haven't already. So Matthew, let's dive in.
Great, and I'll also just say a quick reminder that we love getting questions and comments from folks using, you can use the question box to jump in with any questions or comments that you have. So not a ton to say on federal funding, but I'll just go through a few things that have happened since we last spoke a couple weeks ago. The first is that HUD Secretary Castro testified, I think it was last week, before the House Transportation, Housing, and Urban Development Subcommittee. It was a good hearing. I'm only going to get specifically into the bits that are relevant to housing counseling. It did come up a few times. The first time it was a positive thing in that I'm blanking on who asked the question. It may have been David Joyce from Ohio. Whoever asked the question about what in the HUD budget was there to deal with kind of abandoned vacant houses and kind of blight clearing and reviving neighborhoods. And Secretary Castro kind of gave his answer, but then flipped it very positively to housing counseling and made the point that their ultimate goal is preventing foreclosure, and that's why they had asked for the funding they had asked for HUD housing counseling assistance. So we talk a lot about when we're having conversations with the administration. One of the things we're always asking them is to just talk about counseling, and so it was good. We were encouraged that he brought it up kind of unprompted and in such a positive way that the ultimate goal should be preventing foreclosure and pointing to housing counseling as a prime means of doing that. We had also sent questions out to all the Democrats on the subcommittee with suggested questions for them, and later in the hearing, Representative Kildee from Michigan actually used the question we had sent, which basically just kind of teed up it was a real softball, but just teed up a lot of the successes that the data on the success of housing counseling, and really just gave Secretary Castro a reason to talk about why they requested the additional funding that they requested. So folks, I imagine know, but the request from the administration was for $60 million versus the current level is $47 million. So it just gave him a good opportunity. He cited, I forget which of the studies he cited, but he cited one of the recent studies, and really just made the point that the evidence is out, that counseling works, and that they think it's really important for Congress to fund counseling at the level that we asked. So I think it's just very positive to hear housing counseling being talked about so positively on the Hill. Bruce, did you want to jump in with anything?
Just do a quick shout out that HPF, the Housing Preservation Foundation, did a lot of work with Representative Kildee, and that's bearing fruit. That it's really he's become a new advocate for the counseling world.
Absolutely, and I think, I don't know how, we'll see if we get into it on the next slide, but there's been a lot of positive talk, especially from Democrats, but there is just a kind of a noticeable change in Capitol Hill in how counseling is discussed, I think, from even a few years ago, and that's very encouraging. If you don't have anything else to add, Bruce, I'll move on to the meeting we had a couple weeks back, 2 weeks ago today, with the Senate Appropriations subcommittee staff. So the kind of 2-cent version of that conversation was, it was with both majority and minority staff, and the takeaway was that they both, the majority and minority, so the Republicans and Democrats, view counseling positively. Again, in not so distant past, when we've gone to been on the Hill, some of the conversations with counseling, especially with Republicans, the issue was, well, we're just not sure whether it works. We haven't seen, good enough studies on it. The positive takeaway from the meeting with the Senate Approp staff was that even the Republican staff member said, I think that question, we believe that question has been answered, and that we absolutely believe that it works. Unfortunately, the flip side is that the point that they also really stressed was that their committee is starting with a $3 billion gap just to fund programs this year at the level that they're currently funded. They've got to find $3 billion, which is, it's partly due to FHA receipts being low. It's partly due to sequestration, which as of now will be in place. And there's just mandatory increases for things like Section 8 vouchers. So they have a huge hole to fill, and it obviously creates a difficult environment in which to ask for a not insignificant increase in funding for your program. But the positive, again, is that they like counseling. They believe it works. Susan Collins is the chair of the THUD subcommittee. She's always been a champion of counseling. So we feel like we're in a good place to be having these conversations, recognizing that in the environment we're working in, it's something of a tough sell to ask for an increase, but we think that we have a good case for asking for it. Bruce, is there anything you want to add on?
No, I think you've kind of nailed it. That at the end of the day, we're an inexpensive program. We do have supporters on the Republican side, where it's clearly important with Susan Collins, and then in the House with Charlie Dent. We're obviously going to do a lot of work about trying to build more support in the Republican side, and that's a lot of what Matthew's spending his time on right now.
And then the last thing I'll touch on, so next week on Tuesday and then the following week, we will be on the Hill talking with all House Republicans, and we've talked a lot on these calls about why that's where we're putting our focus. It's about half folks from the THUD subcommittee and half folks from the Financial Services, Housing and Insurance subcommittee. So we've talked about this before, but the purpose of these meetings is just to go in. It's just purely educational, just to talk about this is what counseling is, this is what we do, this is who we serve, and most importantly, this is what's going on in your district. This is the difference that counseling agencies are making in your difference, and we've got data, district-level data, and we'll probably bring some anecdotes and list of agencies, so really tying everything into the district. And the kind of takeaway from that meeting, we're hoping will be we're going to invite the member of Congress to do an event in the district where they can meet counseling staff, meet clients, and really get a firsthand look at what's happening. So in the next couple of weeks we'll be in D.C. and then with the goal of in the kind of early to mid-summer doing in-district meetings. So that's not only, that's more long-term kind of building support from House Republicans, but it obviously relates to federal funding as well.
And I'll add just that the letter that we all signed, the 500-plus signature letters, already become a valuable tool, and we'll use that aggressively when we do our visits as well. Every office got copies, but we're also using it as a reminder as we walk in the door to show the kind of broad depth and support. And the great thing is that there's no state that you can look up anymore and find at least several housing counseling agencies signed on it. So it's a very helpful tool. Really appreciate everybody jumping in and making that happen.
And then the last thing, I'll just make a quick pitch that the most important thing folks can be doing at this point is just continuing to work, and we say this all the time, but continuing to work to build the relationships with your congressional delegation, the member in the district that you're in, but also if your service area very likely covers multiple congressional districts. So really any member of Congress who represents clients that you're seeing, it's the most helpful thing you can do is foster that relationship with those offices, make sure that they know you're there, the services you're providing, that their office, their district office, can use you as a resource when they have constituents coming in and having a housing issue, that they can be referred to your office. And making those phone calls, it really just takes a minute to make a phone call to the office and just let them know, that federal funding is incredibly important for your organization and to ensuring that you can provide the services that you're providing, and just asking them to be supportive of counseling.
And very important to do it to your Republican representatives, even if your office is in a Democratic district where you're bringing clients in. Really important to do as much as you can to figure out where your clients are coming from that might be in Republican districts and to reach out to those offices. We'll continue talking about this because this is going to be part of our future for the entire year here. So, as Julia Gordon is kind of a leading thinker on housing reform in the United States and especially in Washington, D.C. She's been on our call before. She's a good friend of our organization and our work. And she was the Democratic panelist on a recent subcommittee hearing where we have this quote from her. I mean, I should just say that she used to work at the Center for Responsible Lending, and in that role was critical in developing and writing parts of Dodd-Frank, has been deeply involved in congressional and administration work, HAMP reform, worked for FHFA for about a year and a half, and has been the leading housing person at the Center for American Progress for the last couple of years. And, you know, we'll have her on the call at different times as well. She's very clear thinking about what needs to be done in the field, and but has recently kind of risen up to support our work. So I'll give you a little dramatic reading here, but it's just so great to hear people say this. It remains a mystery to me why the entire mortgage industry is not focused like a laser on trying to get housing counseling to every person who's going to buy a house. This is an incredibly complex transaction that is more money than most consumers will ever spend on anything else in their lifetime, and we expect them to just go out into the marketplace to do this for themselves. That just doesn't make sense then. For really just a very small amount of money, we could significantly increase the success rates of mortgages and do a better job of working with servicers when mortgages get into trouble for some reason due to a life event. I mean, it does kind of just summarize the issue for us, and it's great to hear somebody from the outside talk about us that way. We have done a lot of work in the last couple of years to try to build both a public awareness, there's a lot more work to do on that, but in the policy circles to really increase housing counseling's presence. And this is happening, so I want to share it with you partly because you are the people in the field that are making this work happen, and you know, you're getting some recognition here. We have got more work to do, but you know, we have made a lot of progress in the last couple of years, and so this is kind of a warm pat on your back for the good work you're doing.
I'll also just quickly mention, just to give a little context, I think we may have given a quick report on this hearing, but so this was the House Financial Services Committee doing a hearing on HUD's decision to lower the FHA premiums. So there were 3 witnesses called by Republicans, and Julia was the lone witness that had been called by Democrats. But I think the most important takeaway from that was how positively counseling was talked about, not just by Julia, but also by the majority witnesses. One of them, I think they were a lender, but went out of their way to say, yes, we agree that counseling is effective, and we offer it to all of our clients free of charge. The one kind of holdout was someone from Genworth, who basically said, we don't know if it works, but we offer it to everyone anyway. I may have misattributed a quote earlier to Congressman Kildee, but he said, he kind of called him out and said, so what I hear you saying is that you don't know if it works, but yes, you do it, and basically called him out for that. And there was just a lot of very positive discussion of counseling in that hearing. And even from Republicans, Congressman Dold made the comment that he supported Hawk, and that he was open to seeing evidence that counseling works. So I think it's important that even in the context of a fairly hostile hearing, counseling was kind of a bright spot, and not that there was unanimity in support of it, but there was very little pushback against it, which I think is a lot of progress that's been made.
Yeah. So along those lines, tomorrow in Bethlehem, Pennsylvania, Congressman Charlie Dent will become the 2015 Champion of Housing Counseling Award recipient. Several of you are going to join us for this, and appreciate that. We'll be doing it at the Community Action Committee of Lehigh Valley, Alan Jennings' organization. Alan has had a long-term relationship with Congressman Dent, and we'll have the local NHS there. We'll have the head of the Pennsylvania Housing Finance Agency, Brian Hudson, there to speak. It'll be kind of a gala event, but it's really well earned. That Charlie Dent is on the Appropriations Committee, was instrumental in, at that point where we were zeroed out on the budget, helping us get back in again. Certainly lots of people who worked on it, but on the Republican side, he was very key. And then last year, in a tough budget year where everything was getting cut, and on the THUD subcommittee, the numbers were pretty grim. We were at $45 million in the subcommittee, and Charlie Dent really went out to leadership and engineered for an extra $2 million to be put into the budget, which is what the final figure was in the final budget, and so added money into our programs. You know, he's a very vigorous supporter of housing counseling, very vocal, well respected as a moderate Republican with seniority. So we wanted to go our way to give him both recognition in his district and some national recognition about the good work he's doing. So he's going to get a granite plaque from us declaring him the champion of 2015. And it should be a good group of people there. If you're interested in joining us, it's in Bethlehem, Pennsylvania. Yeah, let me know. It's tomorrow morning, starting at 10:30. The previous recipients were Sean Donovan, who really did some excellent work as Secretary of HUD, especially around the settlements and about bringing housing counseling into the forefront. Often when he made his budget presentations, housing counseling was the first item that he talked about on the budget, and worked really to try to, certainly in the President's budget, get us up at $60 million. And then, of course, the other recipient was Sarah Jarek, who's the Director of the Housing Counseling, has been doing wonderful work with us and with our whole community, and is a real breath of fresh air in terms of working at HUD. So this is a proud tradition, and we hope that this helps move our work forward. We'll see how it goes. A couple, just some housekeeping things really quickly before we get into our presentation. So one is that the HUD Task Force had a tremendous year last year. We did a lot of work on getting HUD to improve the reporting systems, the dealing with the personal activity reports, and all the burdens that they represented. We, on point of contact with the POCs with HUD, we now have sort of a complaint email box, as well as individuals to go to if there are problems with your POC. And so far the reviews have been good about this working. We can always do something anonymously through us if you need to, but we encourage you to go directly to them as well. And the point is that, as Sarah Jarek said to us in a meeting when she used to work for Mayor Koch, every complaint is a gift. It's a gift to tell you what's going on in the field, and they want to treat it that way and improve their performance. And we're certainly seeing on the top level that this is true. So take advantage of it. There's a lot of concern about the performance reviews and making them into predictable and less demanding events, and looks like we've made big progress on that way, and really hats off to HUD to have done this. But we have a revised checklist. There'll be desk reviews. They don't have to be all of them in-person reviews, and items that are recurring items from every year, like incorporation documents, do not need to be submitted every year. And so hopefully some improvements there. Did a lot of work on NOFA, and I think some of those things are filtering in, and we'll see if others have as well. But there is certainly a much greater flexibility now in what's being done in the NOFAs than we'd seen in the past. And we spent some time on training needs, and as you've all have seen, HUD has put together a good training regimen. Maybe some better trainings than others, so you could do some work on improving the quality. But my point here right now is, I'm bringing this up, is that we've got 2015 in front of us. We have tremendous access to the senior people at HUD, and we should really think about what is it we would like to ask from HUD to improve on this year. We'll certainly go back over our old list, figure out where we still have work to do, but we have room for more things. And a few people have mentioned to me that they'd like to be on the task force, and we would love to have you. So if you're interested, shoot me an email. We probably won't have our first meeting until May, but do it now, get on the list. We want to get things up and running again, and it's an area where all of us can have a really big impact, and HUD is eager, really, I mean, eager is the right term, to work with us on this. So it's been a success all around. I sent out a note about Caliber Home Loans. So they are a servicer, not as famous as some others, but they're growing in the field. They've been a problematic one and often an unresponsive one. There is a major news outlet that is doing an investigative report. Our friends at Center for American Progress reached out. They're particularly concerned about these non-performing loan packages that are where non-performing loans are sold in bundles to investors. One of the largest purchaser, maybe the largest purchaser on HUD, is a company called Lone Star, and they use Caliber. CAP has done a lot of work along with a whole coalition of organizations about why are we disposing of these loans that had consumer protections into situations where they have very few protections and end up almost certainly being foreclosed on. And the early record on what's happening has been pretty dismal, so having a major investigative piece will be very helpful. What they were looking for is examples of where Caliber has not been a good servicer, and particularly where they're purchasing a portfolio and the modifications haven't been there in the pipeline, haven't been honored, and whatever agreements are there have been lost. So I know that they're not the biggest servicer in the past, but they'll grow in our world. So any examples you've got, Sarah Edelman is the person working on it there, and her contact information is in the email we just sent out this morning. So it'd be really helpful if you can spend a few minutes and identify with your staff if you have any of these kind of cases and get them to her. CCing me is great if you have the time, but the most important thing is to get it to Sarah. Also on kind of on the future now is that in the next call, we're not going to have another April call. I'm going to be out of town then, but we're going to have our first call, and I'm pretty sure it's May 7th instead of May 2nd. I think it's May 7th that it's the leaders call. And we're going to have Kristen Messerly on. She is a millennial who is a specialist in millennial issues, and I sent out the PowerPoint, which is interesting to look at. It doesn't do justice to the kind of the nuance of what she had to say. It was a fascinating talk, and I thought this group could really get a lot from it. It did bust up some myths about millennials, and I think as they're being the home buying force, the next wave of home buying force soon to come, understanding how what their interests are and where they fit in will be good. It's also likely that they may fit into the housing stock that's most available to a lot of the counseling agencies. A lot of interest in living in cities and in urban density and things that convenience to mass transit, those kinds of things. But really worth it to be on the call, and if you want to invite some other people from your staff who might not normally be on, that might be helpful. You're really welcome to do it. So let's move on. Do we have Roz on? Oh, good. Okay. So we're launching a conversation that we'll do throughout the year. And the idea is that there's a lot of innovation going on in the field, and it's in some ways isolated into small geographies, but they're big ideas that all of us can learn from and help us think about either replicating them or doing things or learning from the experience to try to broaden our work. And I think there's a broad recognition in our industry that all the great and excellent work we do, we need to really diversify our programming and our funding sources if we're going to be able to both meet the needs and keep our businesses on a larger and more proactive scale. So Roz is the director of ESOP based in Cleveland, though it's a large multi-city program in Ohio. It's always been a source of innovation, and Roz coming into the role has, kept up that tradition and really done some new programs. She and I were the panel on in the NCRC conference last week, and there I was talking about all our national things and things like that, and she was like talking about all this fascinating and exciting things that they're doing in Ohio, and I thought this would be a really good way to kick off the series. Before we get started, I'd just like to make one plug, which is you may have similar things like this that you're doing that nobody else has thought of or has not done that same way, that may have improved and strengthened your organization. So shoot me an email. We may be able to get you on, or to whoever you would like to nominate to do it for future shows. With that note, so Roz, are you there?
I'm here. Can you hear me?
We can hear you wonderfully.
Great.
So welcome. And
thank you. Thanks, Bruce.
I'll hand it over to you.
Okay. Well, I want to start with a disclaimer, everybody, which is we haven't figured anything out. We are figuring out as we go. One of the things I learned from the recent NCRC conference is that we were very late to the party. Seems like a lot of housing counseling agencies around the country had already been doing financial capabilities work, which we weren't. And so we have a lot of room for innovation on our end because I think we were slow to expand. So to just kind of get into it, what I'd start saying is that innovation has a cost, not only a financial cost, but we've got to have failure as an option. In business, there's so much money spent on R&D, and failure is expected. And in the nonprofit world, it's not so. It's not so with funders. It's not so with boards. And I think the job of every executive director at this point is to start talking about that, talking about it with their board, with their funders, so that we are not fearful and can try new things and sometimes fail. So with that, the first thing that I did when we came in was try and figure out, we have a lot of competition here in Cleveland. We have a lot of housing counseling agencies here and across the state. How can we look and identify unmet needs? How can we partner with new partners that might not seem to be necessarily a good fit, or people we haven't partnered with before? How can we approach new funders and bring new money to the table? So I'll digress from the PowerPoint for 1 second and say I can give 2 quick examples of that. Approaching new funders. We went to a foundation that had never funded in the housing counseling arena, but funds for programs for families. So we were able to convince them to support one of our new programs, a single-family rehab program, because we said that we were going to create a program for people we were unable to help during the foreclosure crisis, who lost their homes, and it's now 3 to 5 years down the line, and we want to give them a second chance. And this will stabilize families, stabilize neighborhoods, et cetera, et cetera. And all of a sudden, they wrote us a big check, and we're hoping to create a long-term relationship with them, and we got a new program up and running. The other example that I would use, in particular partnering with other nonprofits that we might not have partnered with in the past, is workforce development agencies. Now, I don't know what's going on around the country, but in Cleveland and in Ohio in general, everybody is looking to give money to workforce development. Now, we have to always be aware of mission bleed. We don't want to go outside of what we know and what we're good at, but there are ways to do that. So my board sent me away from a board meeting with some homework. Try and partner with workforce development agencies. So what we were able to do was create a new program that we're still trying to get all the funding in place for, where we're going to work with an agency here called Towards Employment, very successful workforce development agency. And we are going to do financial capabilities counseling with the folks that they've recently employed, whether it be reentry or just people coming back into the job market. And what we realized is that's the ultimate teaching moment. And we've got to look for those teachable moments when we're creating new programs. So those were two really quick digressions and examples of that. But on the next slide, I'm going to talk about one of our two really big programs. And hopefully, Matthew's got it. We have a senior financial empowerment initiative. And what we looked at when we were trying to look at unmet needs are who's not being helped, who is having certain needs met and not others. And what we realized was that here in Ohio, we were at the convergence of two new phenomena, the housing crisis and the graying of America. Nationally, 20% of the population is going to be 65 or older by 2030. In Cleveland, 17% of our population are already seniors. So we are well above the national curve. There was a recent study by AARP and Harvard talking about the housing cost burden for seniors. 1/3 of adults 50 and older pay an excessive share of their income for housing, over 30%. Over 70% of homeowners 50 to 64 are still paying their mortgage. And unfortunately, really a scary number is 40% of homeowners 65 and older are still paying their mortgage. So when we looked at that, and then we took all of our numbers for the last 10 years of people we've helped with foreclosure prevention, almost 37% of our clients were 55 or older. Most of these seniors want to age in place. They want to age in community. And there's a lot of senior service agencies out there dealing with seniors, but what they're dealing with is their health issues, and they're not dealing with their economic security issues. More than 1 in 5 seniors have been victims of financial abuse. That's 7.3 million people. That's annually, and that's for sure underreported. Besides rape, financial exploitation is the most underreported crime, whether it's because of embarrassment or the fact that 90% of exploiters or financial abusers are family members. The average loss is $150,000 per victim, and there's at least $2.9 billion a year annually lost by seniors to financial exploitation and fraud. So as you can see, this is a new and growing problem as we gray even more. So we decided to create an integrated program for seniors. Now, we define seniors as 55 or older, which for me is not a happy number because I'm closer to that than I am to millennials, but what are you going to do? We have a variety of programs, and the idea is that seniors... Huh? You're there already?
Some of us are there already.
Yeah. Well, look, I guess it's better than the alternative, right? So, so what we've done is a senior can come in for any reason, whether they're coming in, we're a free VITA tax site. So whether they're coming in to get their taxes done, whether they're coming in because of foreclosure issues, no matter the reason, we can offer them any of our other services. We want to be multi-touch throughout the year. So when we started being a VITA program, we went to our 211 agency, our United Way 211 agency, and said, instead of looking just at zip codes for where you refer people to free tax sites, will you send us your seniors? So about 25% of the people that we've seen this year in VITA are seniors. This is, again, one of those teachable moments. People are getting money back. It's a good opportunity to talk to them about financial counseling or about financial coaching. The other thing we did was we got trained by the CFPB on their Money Smart for Older Adults curriculum, which is about how to identify and avoid financial exploitation. We started doing these workshops around the county, And what we realized was that it wasn't quite enough. So what we did was we took the Money Smart program that's supposed to be 4.5 hours, and I'm yet to meet a senior who'll sit for 4.5 hours, and we turned it into 6 modules. So the first 2 modules are about financial exploitation, and the next 4 modules are straight financial capabilities work. And then, as a result of these 6 modules, we're able to get about 20 to 25% of those attendees into our one-on-one financial counseling or coaching. The other thing we did was we became a benefits checkup site, Ohio Benefits Bank, so we can help seniors apply for benefits. And then the last thing we did, and I have to say, I'd like to say that we were, well, we were lucky. We got invited to attend the Clinton Global Initiative, and we were able to leverage that and went to a local bank, and we got $200,000 from them to fund a small dollar property tax loan program. So if you're 55 and you live in Cuyahoga County and you are behind in your real estate taxes, you can come to us, and if we can make you whole for anywhere between $500 and $6,500, we will not look at your credit score. So what we did is, it's a private-public partnership, and this is really what I want to talk about more than just the program. We got private money from a bank. They funded our loan program by depositing the money at a local CDFI. The local CDFI is happy because they got $200,000 of new deposits. They are servicing our loans. They get new members. Everyone who gets a loan has to become a member. And we underwrite the loan. So we are the final decision maker. And our fourth partner is the county treasurer's office. So in the 1 year it took us to get this program up and running, there were a little over 3,000 seniors that were delinquent in their taxes. By the time we got it up and running and were ready to go and asked for a new list from the county, there were 6,500 seniors that were tax delinquent. So we're seeing this as the new foreclosure crisis here in Ohio is real estate taxes. So I think that this is our best example of innovation, because we are building long-term relationships with these clients. If they get a loan, they are required to engage in 1 year of budget coaching, financial coaching. And that's a software program called My Budget Coach. And our hope is that coming here once a month, working on a computer, if they have the capacity to do that, or coming here and using our computers, we're able to build trusting relationships and really impact behavior change. And the loan becomes a great entry point for anybody interested to look at all of our programming that we have available. So that's one program. And again, we got lucky.
Can I just jump in with that, with a question?
Absolutely.
So how do you pay the bills on that?
Well, I was just going to say, one of the things we were able to do is really bring a lot of money into it. My agency historically had never gotten United Way funding, and we were able to get $100,000 from United Way this past year, and it's multi-years now, $100,000 a year. We were one of only 2 or 3 agencies in the county that got funded for a non-childhood education program, and we also got funded at the max that they were doing for new agencies. And then once we were able to get United Way funding in, we were able to leverage that, and I believe we've got 6, maybe 7 banks who are funding this program, as well as 3 or 4 community foundations in Cleveland, and we've been able to expand into another county about an hour away and bring 2 community foundations there, and now it looks like also get some money from a senior tax levy. So there's money out there for seniors that historically hasn't been used for financial capabilities work, but anybody in the senior world gets it. And so we're now trying to bring it up a notch. We're trying to find ways to piggyback, for example, go to hospitals. Cleveland has a lot of big hospitals. They have counselors that work with seniors about their health and housing, and start to bring financial capabilities into that discussion regularly. Does that answer your question, Bruce?
That's great.
Okay, so
I'm sorry, just one other question that someone jumped
Sure.
in with, which is how many times the seniors can access the funds for the taxes. She said she knows, or I'm sorry, he said he knows it's a huge problem with reverse mortgages.
Well, the program is new, so we would probably only loan the money once. Here's the thing: we've probably seen about 100 seniors right now that want this loan. We don't have to do any advertising because we have the names from the county, and even with no credit score requirement. So we have 2 requirements: you have to be 55 at least, and you have to be current on your mortgage if you have a mortgage. Because my feeling is that if somebody's not current on their mortgage, how do I know they're going to pay me back? And I've got this money that I've got to keep in a loan pool, in a revolving loan pool. So, somebody who regularly was paying their bills and then something happened, their spouse died, they got sick, they had a necessary home repair. We have a very old housing stock here. That's who qualifies for the loan. And so I can't imagine that we'd probably let somebody come back to the well more than once right now. Not until we're not raising any more money for the fund yet. We want to make sure that we have people that are generally paying back our loans. And we sign them up for auto pay. So one of the requirements of the loan is you get set up for automatic payments on a monthly basis for your current taxes so you don't fall behind again. And because we're with them for a year doing budget counseling and budget coaching, we hopefully would be aware of that and would be able to be right on top of it when a problem develops. Anything else on that, Bruce?
That's good. Yeah.
There are a few other questions.
Okay,
should
cool.
we just wait till the end, or should I take the questions as they
Oh,
come?
I'm happy to take, because the other thing
Okay,
I was
so
go ahead.
I think we're going to run over the regular time, and that's okay. Let's keep going.
All right. So
Okay.
I'll just ask the question that we've got for now, and then we've got a comment I'll come back to at the end. So it's if there's any minimum payment based on the loan amount, and what is your default rate on the loan program?
We do not have a default rate yet because we've only just started. We really only just went live about 3 weeks ago, so first payments are going to be due in about 2 weeks. It took us a long time to get the first few people approved and get it through the county and get all the bugs out. So we had our first loans approved probably 3 months ago, but we've now got them rolling. So I've got another 6 to approve on my desk. You asked me a second question, so that's the default rate. What I didn't tell you was the interest rate. The interest rate is 10%, and we do charge a 10% origination fee. If a person has a guarantor, they can roll the 10% origination fee into the loan. If they do not have a guarantor, they must pay 10% out of pocket so that they have some skin in the game. That's just how we set it up after talking to our funders and some advisors. So it's definitely not a grant. It's definitely a loan, but obviously 10% is not the 380% of the payday loans that have been going on here. And it's way better than what the private companies who are buying these liens are charging.
And are these secured loans?
They are not secured, and there's a number of reasons they're not secured. Reason number one, I'm a foreclosure prevention agency. The last thing that I want to be doing is foreclosing on people. So that's the ultimate reason. But technically, because of the way we've set this up, there's no way to place a loan. The $200,000 from the bank that's sitting at the CDFI acts as a 100% guarantee. So the CDFI is actually lending their money. If somebody were not to pay, they would immediately go to the $200,000, pull out the money and as the guarantee, so there's nothing to go after because they've been made whole. We can't put the lien on because technically we're not loaning the money. We're underwriting it. Somebody else is loaning their money. Does that make? I'm a real estate lawyer in my past incarnation a few years ago, and it just didn't make sense for us to at any level to secure the loan.
Good.
Okay.
Let's keep going. Great.
So I will go. All right. So the second thing that I'm going to quickly touch on, and really the last thing, and this has to do with Mission Bleed. We really wanted to look at how to expand what we're doing without Mission Bleed. So when we looked at our mission and our vision, we realized that we were really missing out on making a holistic, integrated program. And so we started doing, and I'm sure we're, again, late to the party. I'm sure everybody I'm talking to on the phone already does home buyer education and pre- and post-purchase counseling. But we were able to do that pretty quickly and, again, bring some new foundations to the table for home buyer education. Our state money has run out for foreclosure prevention, but they do fund post-purchase counseling and pre-purchase counseling. So we were able to get contracts for some post-purchase counseling. And then what really came out of all of this was looking at what we have internally that we maybe can expand on. And my head of my counseling department, turns out she was a realtor in her last life. And when I started talking to a lot of people in our industry here in Cleveland, I found out that a lot of my competitor agencies had a lot of former realtors. And they left that work even before the crisis because they saw what they were doing, putting people in homes that they simply could not maintain or sustain over the long haul. So it's very easy for us to blame banks and mortgage brokers for the foreclosure crisis. But you know what? The realtors have kind of gotten off scot-free on this. But realtors get paid commissions, and they are incentivized to put you in the most expensive house you can get a mortgage for. And this was creating a whole new level of problems here. And so I have a board member from Chase, and he said, I know of an agency we fund in California and San Diego called CHW, and I think it's Community Housing Works. So I can't claim to be innovative. I haven't created this. We've just instituted it here. They started a nonprofit realty. And so we looked at what it would cost to do that here. And we had to negotiate with the state, but we were able to get permission to be a nonprofit realty. So we've set up a wholly owned subsidiary. I did not want to do it with ESOP because I did not want HUD's oversight of my realty program. So it's a separate, completely separate entity. We filed for a 501c3, it's set up as a nonprofit, and we're a full-service, comprehensive real estate brokerage firm. We'll take on anybody, we'll list any property, but we are pretty much concentrating in low-income MSAs and low-income buyers and sellers. And I guess where we how we integrate it is the perfect client for us is somebody who comes in for home buyer education, who gets pre-purchase counseling, and who then chooses us as a realty agency. This has resonated so much here in Ohio that we've already got 3 realtors that are working, and I'm looking for more. And it's resonated so much that my competitors, who normally, you know, we play nice, but we're still competitors. We're competing for the same limited dollars and for the same clients. I'm actually going to my competitors' home buyer education classes, and we are doing the realty section of their home buyer education classes, because the thing that we don't do is we don't pay our realtors commissions. Our realtors are not incentivized to put our home buyers in the most expensive house they can afford. So while we still have fiduciary obligations to our buyers, the way any broker would have, we also have, in our mind, a fiduciary duty to the community to create sustainable long-term home ownership. And that's how we're going to stabilize neighborhoods. I think I've gotten everything in that program. I can tell you that we are now. I'm sorry?
Well, let me ask you a question then. So how does the payment work? So they find a property and there's another.
The broker. So I'll explain. So the brokerage itself, right? ESOP Realty Inc. We charge the regular commission. So if we list the home, we pay. You know, we get 3%, and the buyer's agent would get 3%. If we represent the buyer and we are able to find them a home, we get 3%. But my agents themselves are paid a salary. They are not incentivized. They don't get any kind of commission or bonus if they put somebody in a more expensive house. That's not what we want. So I can tell you that we started this business from scratch. We started getting our paperwork in place in October. I have spent less than $7,000 since then, and we're already operating at a small profit. Now, the San Diego agency, and believe me, Cleveland is not San Diego. Their first year, I believe, they brought in $70,000 in commissions. By their fourth year, $1.9 million. So we see this as something that over the long term we can build and can help us become self-sustaining as an agency. And I want to say we're already, we're able to take this program and that idea of trying something self-sustaining, and we can leverage that with every foundation we look for money for any program, because it's innovative, it's different, and it's an attempt to run our agency like a business, and everybody likes it. So we list REO properties from banks. So banks that we've had relationships with, we've gotten on their list, so we list them. I'm trying to think, we've gone to the county land banks, we've gone to the CDCs, so we're listing more and more properties as well as representing buyers. And the other thing we're doing is we're going into gentrifying neighborhoods that historically were very low-income MSAs that now are getting more and more expensive, and the regular mainstream agencies, they no longer want to help the buyer who wants to buy on the other side of the tracks in those MSAs, right? Because why would they want to help a $50,000 buyer when they can go 2 blocks over and help a $350,000 or a $550,000 buyer? And so we are actually entering into referral agreements with mainstream real estate brokers, and we're working with the buyers they don't want to work with, and quite frankly they wouldn't treat well. And we're now treating those buyers like they're buying $500,000 homes.
And so you had to get a mortgage broker's license. Was that
difficult? No, we're not doing more. No.
Oh, okay.
No, we did not a mortgage broker license, a real estate broker. We're not doing mortgages.
I'm sorry, brain freeze. Right, real estate license. So you had to get. Okay. Was that difficult to get? And was there a bond requirement?
No, there was no bond requirement. What we did was we had an agent, somebody on staff who used to have our agent's license and whose husband has his agent's license, and they were working with a broker. And what we were able to do was the broker that we were working with, she's, I think, 85 years old. I mean, she's a senior woman, and she was not really doing a lot of the work anymore, but she is nonprofit-minded. She understands the breadth and depth of the issues we have here in Ohio, and she was willing to park her license with us. So she gave up her brokerage and moved her license here. I pay her a minimal fee. I'll just tell you what it is. I pay her $2,500 every quarter if we do 0 to 25 closings, and then it goes up a little bit after that. Simultaneously, we have 3 agents on staff, and I'm about to get my agent's license. I had my broker's license when I was in New York. And we will make sure that one of our current agents are able to get their broker's license. It takes 2 years to working as an agent to get your broker's license in Ohio. So different places have obviously different states have different rules. I had my broker's license in New York, and as a lawyer I was able to get it by paying $200. You can't do that in Ohio. But what I would say, if any of you housing agencies have lawyers, check with your state. There's usually a reciprocity thing for lawyers, and it's a couple $100 to get your license. We pay MLS listing fees, things like that. We have to pay for some continuing ed courses. But overall, there's very little extra overhead. Lock boxes, some for sale signs. But like I said, we've started this business for under $10,000. And it's working tremendously. And what we've been able to do from an agent standpoint is we've been able to go back and look at our former staff who used to be housing counselors, who also at one point in their lives had their real estate license, pay to get them out of escrow, minimal, couple $100, and they have other jobs now. They've moved on, but they're still committed to the work. They're still committed to the people that we help, and they're willing to work nights and weekends. So we'll pay them hourly, and they'll do showings for us on nights and weekends, and they understand the affordable mortgage products. Our HBE instructor understands the affordable mortgage products out there, and we're able to take business to the banks that give us business. So needless to say, that helps us in the long run also. We're able to to get business from our competitors. One of our other competitors sends us all their short sale clients now, where that short sale is the appropriate remedy for them. And we know, because we're housing counselors also, we know how to work with these clients. We understand the short sale process. And we are not in a rush to close somebody on a buy or a sale, because we understand how long it takes.
You might look under the hood and find.
That's what I got, Bruce.
That's great. No, this is fantastic. Good work. So do we have time for a few questions? Can you hang around, Ross?
I got time. I'm good.
Okay.
Right.
Sure.
First we'll just give a shout out to Sergio Claro from CHW is on the call. So we just wanted to give him a shout out.
Great.
Great.
Well then, everybody heard, right? I gave them credit.
Yes.
Not
gave
me,
a nice shout out.
Okay. So one question, and this is actually interesting because it came up on a webinar that we did yesterday, but someone just asked about whether there's a conflict of interest with the HUD guidelines. So can you address that, Rose?
All I can say to that is, if HUD's on the phone, they're going to have to tell me. It's a completely separate entity. We have a separate board, separate audit plan, separate financials. The only thing that's a crossover is I'm the executive director of both.
And
I might add that.
So it did come up yesterday on whether, I forget how it was put exactly, but whether you had to give up your licenses, if counselors had to give up their licenses, and the answer is that they did not.
No. No. And let me also be clear, we do not steer. When we go to our own HBE classes, we have cards from realtors and realtists besides ourselves. We're very clear. You should use somebody you're comfortable with, and and there are plenty of agents in your neighborhoods. When we go to other HBE classes, we do the same thing. So there's definitely no steering. We do satisfy all HUD's requirements about that.
Great. So we actually just got a flurry of questions, so I'll just kind of run through these as quickly as we can. We had someone ask if you'd be willing to share your model. They've been interested in doing this for a while but didn't know how to get it started.
Here's what I'll tell you. I'm happy to. I am so far not an expert at this, and I would say that CHW has been tremendous. I'm certainly not going to tell you to go bother him. Go bother them. I'm happy to talk to anybody who wants to talk to me, but we are just starting out, and we have big plans and big dreams for it. But I'm happy to speak to anybody, and Bruce, you can put my information up on the computer. That's fine.
Great. The next question, I guess, is just kind of asking for your opinion. If you think it would work if it were a buyer agent only, would it still be sustainable, successful?
Interesting. I'm not sure. I think that listing properties, being able to list properties it's in the bag. How I'd like to answer that is to say I don't think so, and the reason I don't think so is for planning purposes, for the big ticket things, buyer, that's a one at a time thing. But when you're listing, and you can go to the Cuyahoga Land Bank, and you can go to a real estate investor who has 30 properties. We are working incredibly closely right now with all of the housing authorities around throughout Ohio, Northeast Ohio, and all these housing agencies are able to have their renters turn their Section 8 rental vouchers into Section 8 homeownership vouchers. So we're now working with them and going to their doing homebuyer education for them for free as a loss leader. And those classes have 30, 40, 50 people in them, and half of them are hiring us as realtors. But we're also now working with them listing properties that they have that they haven't been able to get rid of. They're doing lease purchase with people, with Section 8 people, and if they don't want to purchase the homes that they're in, they need to list them. It's just a lot more. I just don't know that it would work solely as a buyer's agent. You really got to have money to advertise then, I think. I think that's the issue. I think that the advertising costs would probably be really difficult.
Great. That's helpful. The last question is someone just asked about the State Housing Commission and if they had any, if they had weighed in or if that had been a challenge at all for you.
No, I mean, across the board, it has resonated, the idea, with everybody. I can tell you that what I did do with the state realty people was I went to them with all of the information that CHW sent me. I showed them what we wanted to do. I really negotiated. I think I had 6 or 7 state lawyers on the phone before we spent any money to make sure that they were not going to stand in my way from a licensing perspective, and they appreciated that. They had only one requirement, which was my real estate broker, the woman whose license it is, had to be an officer of the corporation. That was their only requirement that was outside the norm. But they were incredibly appreciative of all the work we had done in advance to present to them, and because CHW had done all the hard work already in California, I was able to show that it exists somewhere. I believe there are 3 other agencies in the country that do this, and I don't remember who they are. I think one's in Rhode Island, and I think the other's in Minneapolis.
Great. Well, I think that, so we're out of questions. There were a couple of folks that kind of shared some stories of what they're doing with seniors. Maybe we can bring those up on a future call. But that's all we've got for questions for now.
Great. Well,
Great.
Thank you so much, Roz.
Well,
what a terrific program.
Well, great. Well, thank you very much. This is the first time I've ever done one of these audio things on the phone, so having no audience is a little weird, so I enjoyed your voice every once in a while, Bruce. Thank you.
Good. Well, I think we'll maybe want to have a progress report from you in a few months, but it's a great way to kick off our innovation series, and I do appreciate that you kind of framed it around the issues of trying new things and risking failure. We're going to quickly close couple quick things before we close out the call. So the next call for us is going to be on November 7th. I'm sorry, did I say November? May 7th, and it's going to be the one with the millennials. So again, National Housing Resource Center is a membership organization. You can go right to our website, and up in the right-hand corner, there's a button for joining, and you can look at our contribution scale. We really exist. About 25% of our budget is coming from membership dues, so very, very valuable to us. We really encourage people to join. There are some benefits, but frankly, the reason that people join is really that they're supporting the work. Really amplify what's happening out in what you're doing in the field around the country as part of the policy that's done in the United States. We've got a national initiative with the White House that will hopefully play out into a much bigger public awareness campaign. We've got all the stuff we're doing on funding. We're doing all kinds of educational things like the this series of calls we're doing right now. If you're a member, we have a pretty good, we have a very good HUD compliance set of webinars that Teresa Bardwell from RCAC is doing jointly with HUD, so we always have a couple of HUD people on, and they've been, I think, very useful for the nuts and bolts of your quality plan, your work plan, your 9902 reporting, all those kinds of things, and we're soon going to be able to make those available to people to listen after the webinar, so you can, if you missed it, you can get on it. We're doing a lot of good things, and really, really support appreciate the support we're getting from many organizations. We are at 97 members, so you could be the 100th member if you get in soon. But really appreciate all that you're doing. And we will be, so again, no call in 2 weeks, but we will pick up again in May, and we'll certainly be communicating through the listserv with you. And welcome again to all the new people that joined us. Thanks a lot. Bye.